This week, the Fed released inflation data, and we're seeing a very complex picture when it comes to inflation in the United States. Core CPI, which excludes the most volatile sectors such as food and energy, has actually accelerated in July at the fastest pace that we've seen in 6 months. This pushed annual inflation back up to 3.1%, and higher prices for services and tariff-affected goods were the main culprits here. But when it comes to overall CPI, that figure actually stayed relatively unchanged due to lower food and lower energy costs. These contrasting trends raise a very key question. If underlying inflation keeps rising, how can investors protect the purchasing power of their savings? The divergence between core CPI and overall inflation has influenced the gold market, and prices have actually surged on concerns about rising inflation and uncertainty over Federal Reserve policy. Now, the persistent increases in core costs have caused renewed demand for gold as a safe haven asset, and gold has yet again risen to around $3,400 an ounce. The latest CPI report has intensified speculation about a potential Fed rate cut. In fact, current odds for a September cut exceed 80% amid slow economic growth and low overall inflation, and the Fed's stance has helped drive gold's rally as further expected rate cuts enhance the appeal of non-interest yielding assets like gold and silver. Now, political dynamics are also influencing rate expectations as President Trump has waged near full-on war with Fed Chair Jerome Powell over lowering rates, advocating that lower rates would stimulate growth and benefit U.S. exports and interest payments on debt. However, not all experts are in favor of large rate cuts. David Kelly, chief global strategist at J.P. Morgan, thinks that the Fed should avoid cuts amid persistent inflation, but given the political pressure being put on the Fed, they are expecting a rate cut of about 50 basis points this year and then further cuts next year. Kelly points out, though, that low interest rates over the past 2 decades have driven home prices to unaffordable levels, and they've generated asset bubbles across the board. And if investors believe that the Fed will tolerate higher inflation to support spending, long-term rates could rise. Kelly warns against the Fed straying from its mission of controlling inflation and maximizing employment. It risks eroding trust in the U.S. financial system and the dollar, underscoring the need to diversify into alternative assets like precious metals. And several factors actually suggest inflation may stay elevated here. The dollar, in fact, had the worst 6 months in 52 years, and it's declined about 11% so far this year. Now, gold continues to offer a reliable hedge against inflation and economic uncertainty. J.P. Morgan, Goldman Sachs, and UBS are predicting gold to hit nearly $4,000 an ounce and beyond by the end of this year. And so while inflation remains a persistent concern, even while the Fed prepares to cut rates, if you're concerned about what you're seeing in the market, the economy, and the devaluation of the dollar, I'm Mackay Block with American Hartford Gold. Give us a call today, and we'll discuss how adding physical precious metals into your portfolio can give you the hedge that you need.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.